Guys, welcome back. Chapter 7, 8, and 9 of the Reminiscences of the Stock Operator. Guys, this is where it gets really, really good. Jesse Livermore shares his simple stair-step strategy on how to enter the trade. So if you've been wondering how do professional traders actually get into the trades, this is a really, really good example right here in Chapter 7. He shares his insights on how the big money is actually made. So if you pay very close attention, you will finally get the answer to this super important question. He will focus on helping you understand the importance of understanding basic market conditions. Also, the importance of anticipating probabilities. Idea of the time lock will be explained, what it means to have the right position and at the same time having the wrong play. Lessons of being a bear too soon. Best trader allies are the market conditions. Insights of trading the bear market. Insights on margin loan basics going back all the way to the early 1900s. And probably the most exciting things at all, Jesse Livermore will share specifically how he made $1 million on October 24th, 1907 during the crash of the 1907. In today's money would be equivalent to about $1 billion. He actually shares how he became the king of trading on October 24th, 1907, and how he even participated in saving the market with JP Morgan himself from a total collapse. And as you go for these 3 chapters, please pay attention, especially if you're new, when Jesse Livermore talks about selling stock. He refers to selling stocks short for the purpose of profiting from their drop. And guys, if you're trying to learn more about how to short stocks, our channel is called Market Crash 2018 for a reason, because 90% of our strategies are aimed at profiting when stocks drop. So if you'd like to learn more information, how to short stocks, how to buy put options, how to implement some basic strategies and advanced strategies, definitely click the links below, get more information about how you can do that as well. Enjoy Chapter 7, 8, and 9 of the Stock Operator.
Chapter 7. I never hesitate to tell a man that I am bullish or bearish, but I do not tell people to buy or sell any particular stock. In a bear market, all stocks go down, and in a bull market, they go up. I don't mean, of course, that in a bear market caused by a war, ammunition shares do not go up. I speak in general sense. But the average man doesn't wish to be told that it's a bull or bear market. What he desires is to be told specifically which particular stock to buy or sell. He wants to get something for nothing. He does not wish to work. He doesn't even wish to have to think. It is too much bother to have to count the money that he picks up from the ground. Well, I wasn't that lazy, but I found it easier to think of individual stocks than of the general market, and therefore of individual fluctuations rather than of general movements. I had to change, and I did. People don't seem to grasp easily the fundamentals of stock trading. I've often said that to buy on a rising market is the most comfortable way of buying stocks. Now, the point is not so much to buy as cheap as possible or go short at top prices, but to buy or sell at the right time. When I am bearish and I sell a stock, each sale must be at a lower level than the previous sale. When I'm buying, the reverse is true. I must buy on a rising scale. I don't buy a long stock on a scale down. I buy on a scale up. Let us suppose, for example, that I'm buying some stock. I'll buy 2,000 shares at no. If the stock goes up to ill after I buy it, I am, at least temporarily, right in my operation, because it's a point higher. It shows me a profit. Well, because I am right, I go in and buy another 2,000 shares. If the market is still rising, I buy a third lot of 2,000 shares. Say the price goes to 114. I think it is enough for the time being. I now have a trading basis to work from. I am long 6,000 shares, and the stock is selling at 114. I won't buy any more just then. I wait and see. I figure that at some stage of the rise, there's going to be a reaction. I want to see how the market takes care of itself after that reaction. It will probably react to where I got my third lot. Say that after going higher, it falls back and then rallies. Well, just as it goes back to 113, I shoot an order to buy 4,000 at the market, of course. Well, if I get that 4,000 at 113, I know something is wrong, and I'll give a testing order. That is, I'll sell 1,000 shares to see how the market takes it. But suppose that of the order to buy the 4,000 shares that I put in when the price was 113, I get 2,000 at 114, and 500 at 114, and the rest on the way up, so that for the last 500 I pay 115. Then I know I'm right. It's the way that I get the 4,000 shares that tells me whether I am right in buying that particular stock at that particular time, for, of course, I am working on the assumption that I have checked up general conditions pretty well, and they are bullish. I never want to buy stocks too cheap or too easily. I remember a story I heard about Deacon S.V. White when he was one of the big operators of the street. He was a very fine old man, clever as they make 'em, and brave. He did some wonderful things in his day, from all I've heard. It was in the old days when sugar was one of the most continuous purveyors of fireworks in the market. H.O. Havemeyer, president of the company, was in the heyday of his power. I gather from talks with the old-timers that H.O. and his following had all the resources of cash and cleverness necessary to put through successfully any deal in their own stock. They tell me that Havemeyer trimmed more small professional traders in that stock than any other insider in any other stock. As a rule, the floor traders are more likely to thwart the insider's game than help it. One day, a man who knew Deacon White rushed into the office all excited and said, "Deacon, you told me if I ever got any good information to come to you at once with it, and if you used it, you'd carry me for a few hundred shares." He paused for breath and for confirmation. The deacon looked at him in that meditative way he had and said, "I don't know whether I ever told you exactly that or not, but I'm willing to pay for information that I can use." "Well, I've got it for you." "Now, that's nice," said the deacon, so mildly that the man with the info swelled up and said, "Yes, sir, Deacon." Then he came closer so nobody else would hear and said, "H.O. Havemeyer is buying sugar." "Is he?" asked the deacon quite calmly. It peeved the informant, who said impressively, "Yes, sir, buying all he can get, Deacon." "My friend, are you sure?" asked old S.V. "Deacon, I know it for a positive fact. The old inside gang are buying all they can lay their hands on. It's got something to do with the tariff, and there's going to be a killing in the common. It will cross the preferred, and that means a sure 30 points for a starter." "Do you really think so?" And the old man looked at him over the top of the old-fashioned silver-rimmed spectacles that he had put on to look at the tape. "Do I think so? No, I don't think so. I know so, absolutely. Why, Deacon, when H.O. Havemeyer and his friends buy sugar, as they're doing now, they're never satisfied with anything less than 40 points net. I shouldn't be surprised to see the market get away from them any minute and shoot up before they've got their full lines. There ain't as much of it kicking around the broker's offices as there was a month ago." "He's buying sugar, eh?" repeated the deacon absently. "Buying it? Why, he's scooping it in as fast as he can without putting up the price on himself." "So?" said the deacon. That was all. But it was enough to nettle the tipster, and he said, "Yes, sirree, and I call that very good information. Why, it's absolutely straight." "Is it?" "Yes, and it ought to be worth a whole lot. Are you going to use it?" "Oh, yes, I'm going to use it." "When?" asked the information bringer suspiciously. "Right away." And the deacon called Frank. It was the first name of his shrewdest broker, who was then in the adjoining room. "Yes, sir," said Frank. "I wish you'd go over to the board and sell 10,000 sugar." "Sell?" yelled the tipster. There was such suffering in his voice that Frank, who had started out at a run, halted in his tracks. "Why, yes," said the deacon mildly. "But I told you H.O. Havemeyer was buying it." "I know you did, my friend," said the deacon calmly, and turning to the broker. "Make haste, Frank." The broker rushed out to execute the order, and the tipster turned red. "I came in here," he said furiously, "with the best information I ever had. I brought it to you because I thought you were my friend and square. I expected you to act on it." "I am acting on it," interrupted the deacon in a tranquilizing voice. "But I told you H.O. and his gang were buying." "That's right, I heard you. Buying, buying, I said buying," shrieked the tipster. "Yes, buying, that is what I understood you to say," the deacon assured him. He was standing by the ticker, looking at the tape. "But you're selling it." "Yes, 10,000 shares." And the deacon nodded. "Selling it, of course." He stopped talking to concentrate on the tape, and the tipster approached to see what the deacon saw, for the old man was very foxy. While he was looking over the deacon's shoulder, a clerk came in with a slip, obviously the report from Frank. The deacon barely glanced at it. He had seen on the tape how his order had been executed. It made him say to the clerk, "Tell him to sell another 10,000 sugar." Deacon, I swear to you that they're really buying the stock. Did Mr. Havemeyer tell you? Asked the deacon quietly. Of course not. He never tells anybody anything. He would not bat an eyelid to help his best friend make a nickel, but I know this is true. Do not allow yourself to become excited, my friend. And the deacon held up a hand. He was looking at the tape. The tip ringer said bitterly, If I had known you were going to do the opposite of what I expected, I'd never have wasted your time or mine. But I'm not going to feel glad when you cover that stock at an awful loss. I'm sorry for you, Deacon. Honest. If you'll excuse me, I'll go elsewhere and act on my own information. I'm acting on it. I think I know a little about the market. Not as much, perhaps, as you or your friend H.O. Havemeyer, but still a little. What I'm going to do is what my experience tells me is the wise thing to do with the information you brought me. After a man has been in Wall Street as long as I have, he is grateful for anybody who feels sorry for him. Remain calm, my friend. The man just stared at the deacon, for whose judgment and nerve he had great respect. Pretty soon, the clerk came in again and handed a report to the deacon, who looked at it and said, Now tell him to buy 30,000 sugar. 30,000. The clerk hurried away, and the tipster just grunted and looked at the old gray fox. My friend, the deacon explained kindly, I did not doubt that you were telling me the truth as you saw it, but even if I had heard H.O. Havemeyer tell you himself, I still would have acted as I did. For there was only one way to find out if anybody was buying the stock in the way you said H.O. Havemeyer and his friends were buying it, and that was to do what I did. The first 10,000 shares went fairly easily. It was not quite conclusive, but the second 10,000 was absorbed by a market that did not stop rising. The way the 20,000 shares were taken by somebody proved to me that somebody was in truth willing to take all the stock that was offered. It doesn't particularly matter at this point who that particular somebody may be. So I have covered my shorts and am long 10,000 shares, and I think that your information was good as far as it went. And how far does it go? Asked the tipster. You have 500 shares in this office at the average price of the 10,000 shares, said the deacon. Good day, my friend. Be calm the next time. Say, deacon, said the tipster, won't you please sell mine when you sell yours? I don't know as much as I thought I did. That's the theory. That is why I never buy stocks cheap. Of course, I always try to buy effectively in such a way as to help my side of the market. When it comes to selling stocks, it is plain that nobody can sell unless somebody wants those stocks. If you operate on a large scale, you will have to bear that in mind all the time. A man studies conditions, plans his operations carefully, and proceeds to act. He swings a pretty fair line and he accumulates a big profit on paper. Well, that man can't sell at will. You can't expect the market to absorb 50,000 shares of one stock as easily as it does 100. He will have to wait until he has a market there to take it. There comes the time when he thinks the requisite buying power is there. When that opportunity comes, he must seize it. As a rule, he will have been waiting for it. He has to sell when he can, not when he wants to. To learn the time, he has to watch and test. It is no trick to tell when the market can take what you give it. But in starting a movement, it is unwise to take on your full line unless you're convinced that conditions are exactly right. Remember that stocks are never too high for you to begin buying, or too low to begin selling. But after the initial transaction, don't make a second unless the first shows you a profit. Wait and watch. That is where your tape reading conies in to enable you to decide as to the proper time for beginning. Much depends upon beginning at exactly the right time. It took me years to realize the importance of this. It also cost me some hundreds of thousands of dollars. I don't mean to be understood as advising persistent pyramiding. A man can pyramid and make big money that he couldn't make if he didn't pyramid, of course. But what I meant to say was this. Suppose a man's line is 500 shares of stock. I say that he ought not to buy it all at once, not if he is speculating. If he is merely gambling, the only advice I have to give him is, don't. Suppose he buys his first 100, and that promptly shows him a loss. Why should he go to work and get more stock? He ought to see at once that he is wrong, at least temporarily. Chapter 8. The Union Pacific incident in Saratoga in the summer of 1906 made me more independent than ever of tips and talk. That is, of the opinions and surmises and suspicions of other people, however friendly or however able they might be personally. Events, not vanity, proved for me that I could read the tape more accurately than most of the people about me. I was also better equipped than the average customer of Harding Brothers, in that I was utterly free from speculative prejudice. The bear side doesn't appeal to me any more than the bull side. or vice versa. My one steadfast prejudice is against being wrong. Even as a lad, I always got my own meanings out of such facts as I observed. It is the only way in which the meaning reaches me. I cannot get out of facts what somebody tells me to get. They are my facts, don't you see? If I believe something, you can be sure it is because I simply must. When I am long of stocks, it is because my reading of conditions has made me bullish. But you find many people reputed to be intelligent who are bullish because they have stocks. I do not allow my possessions, or my prepossessions either, to do any thinking for me. That is why I repeat that I never argue with the tape. To be angry at the market because it unexpectedly or even illogically goes against you is like getting mad at your lungs because you have pneumonia. I have been gradually approaching the full realization of how much more than tape reading there was to stock speculation. Old Man Partridge's insistence on the vital importance of being continuously bullish in a bull market doubtless made my mind dwell on the need, above all other things, of determining the kind of market a man is trading in. I began to realize that the big money must necessarily be in the big swing. Whatever might seem to give a big swing its initial impulse, the fact is that its continuance is not the result of manipulation by pools or artifice by financiers, but depends upon basic conditions. And no matter who opposes it, the swing must inevitably run as far and as fast and as long as the impelling forces determine. After Saratoga, I began to see more clearly, perhaps I should say more maturely, that since the entire list moves in accordance with the main current, there was not so much need as I had imagined to study individual plays, or the behavior of this or the other stock. Also, by thinking of the swing, a man was not limited in his trading. He could buy or sell the entire list. In certain stocks, a short line is dangerous after a man sells more than a certain percentage of the capital stock, the amount depending upon how, where, and by whom the stock is held. But he could sell 1,000,000 shares of the general list if he had the price without the danger of being squeezed. A great deal of money used to be made periodically by insiders in the old days out of the shorts and their carefully fostered fears of corners and squeezes. Obviously, the thing to do was to be bullish in a bull market and bearish in a bear market. Sounds silly, doesn't it? But I had to grasp that general principle firmly before I saw that to put it into practice really meant to anticipate probabilities. It took me a long time to learn to trade on those lines, but in justice to myself, I must remind you that up to then, I had never had a big enough stake to speculate that way. A big swing will mean big money if your line is big, and to be able to swing a big line, you need a big balance at your brokers. I always had, or felt that I had, to make my daily bread out of the stock market. It interfered with my efforts to increase the stake available for the more profitable, but slower, and therefore more immediately expensive method of trading on swings. But now, not only did my confidence in myself grow stronger, but my brokers ceased to think of me as a sporadically lucky boy plunger. They had made a great deal out of me in commissions, but now I was in a fair way to become their star customer, and as such to have a value beyond the actual volume of my trading. A customer who makes money is an asset to any broker's office. The moment I ceased to be satisfied with merely studying the tape, I ceased to concern myself exclusively with the daily fluctuations in specific stocks. And when that happened, I simply had to study the game from a different angle. I worked back from the quotation to first principles, from price fluctuations to basic conditions. Of course, I had been reading the Daily Dope regularly for a long time. All traders do. But much of it was gossip, some of it deliberately false, and the rest merely the personal opinion of the writers. The reputable weekly reviews, when they touched upon underlying conditions, were not entirely satisfactory to me. The point of view of the financial editors was not mine, as a rule. It was not a vital matter for them to marshal their facts and draw their conclusions from them, but it was for me. Also, there was a vast difference in our appraisal of the element of time. The analysis of the week that had passed was less important to me than the forecast of the weeks that were to come. For years, I had been the victim of an unfortunate combination of inexperience, youth, and insufficient capital. But now I felt the elation of a discoverer. My new attitude toward the game explained my repeated failures to make big money in New York. But now, with adequate resources, experience, and confidence, I was in such a hurry to try the new key that I did not notice that there was another lock on the door, a time lock. It was a perfectly natural oversight. I had to pay the usual tuition a good whack per each step forward. I studied the situation in 1906, and I thought that the money outlook was particularly serious. Much actual wealth the world over had been destroyed. Everybody must sooner or later feel the pinch, and therefore nobody would be in a position to help anybody. It would not be the kind of hard times that comes from the swapping of a house worth $10,000 for a carload of racehorses worth $8,000. It was the complete destruction of the house by fire, and of most of the horses by a railroad wreck. It was good hard cash that went up in cannon smoke in the Boer War, and the millions spent for feeding non-producing soldiers in South Africa meant no help from British investors as in the past. Also, the earthquake and the fire in San Francisco and other disasters touched everybody: manufacturers, farmers, merchants, laborers, and millionaires. The railroads must suffer greatly. I figured that nothing could stave off one peach of a smash. Such being the case, there was but one thing to do: sell stocks. I told you I had already observed that my initial transaction, after I made up my mind which way I was going to trade, was apt to show me a profit. And now when I decided to sell, I plunged. Since we undoubtedly were entering upon a genuine bear market, I was sure I should make the biggest killing of my career. The market went off, then it came back. It shaded off, and then it began to advance steadily. My paper profits vanished, and my paper losses grew. One day, it looked as if not a bear would be left to tell the tale of the strictly genuine bear market. I couldn't stand the gaff. I covered. It was just as well. If I hadn't, I wouldn't have had enough left to buy a postal card. I lost most of my fur, but it was better to live to fight another day. I had made a mistake, but where? I was bearish in a bear market. That was wise. I had sold stocks short. That was proper. I had sold them too soon. That was costly. My position was right, but my play was wrong. However, every day brought the market nearer to the inevitable smash. So I waited. And when the rally began to falter and pause, I let them have as much stock as my sadly diminished margins permitted. I was right this time for exactly one whole day, for on the next there was another rally. Another big bite out of yours truly. So I read the tape and covered and waited. In due course, I sold again, and again they went down promisingly. And then they rudely rallied. It looked as if the market were doing its best to make me go back to my old and simple ways of bucket shop trading. It was the first time I had worked with a definite forward-looking plan, embracing the entire market, instead of one or two stocks. I figured that I must win if I held out. Of course, at that time, I had not developed my system of placing my bets, or I would have put out my short line on a declining market, as I explained to you the last time. I would not then have lost so much of my margin. I would have been wrong, but not hurt. You see, I had observed certain facts, but had not learned to coordinate them. My incomplete observation not only did not help, but actually hindered. I have always found it profitable to study my mistakes. Thus, I eventually discovered that it was all very well not to lose your bear position in a bear market, but that at all times the tape should be read to determine the propitiousness of the time for operating. If you begin right, you will not see your profitable position seriously menaced, and then you will find no trouble in sitting tight. Of course, today I have greater confidence in the accuracy of my observations, in which neither hopes nor hobbies play any part. And also I have greater facilities for verifying my facts, as well as for variously testing the correctness of my views. But in 1906, the succession of rallies dangerously impaired my margins. I was nearly 27 years old. I had been at the game 12 years. But the first time I traded because of a crisis that was still to come, I found that I had been using a telescope. Between my first glimpse of the storm cloud and the time for cashing in on the big break, the stretch was evidently so much greater than I had thought that I began to wonder whether I really saw what I thought I saw so clearly. We had had many warnings and sensational ascensions in call money rates. Still, some of the great financiers talked hopefully at least to newspaper reporters, and the ensuing rallies in the stock market gave the lie to the calamity howlers. Was I fundamentally wrong in being bearish, or merely temporarily wrong in having begun to sell short too soon? I decided that I began too soon, but that I really couldn't help it. Then the market began to sell off. That was my opportunity. I sold all I could, and then stocks rallied again, to quite a high level. It cleaned me out. There I was, right and busted. I tell you, it was remarkable. What happened was this. I looked ahead and saw a big pile of dollars. Out of it stuck a sign. It had "Help Yourself" on it in huge letters. Beside it stood a cart with Lawrence Livingston Trucking Corporation painted on its side. I had a brand new shovel in my hand. There was not another soul in sight. So I had no competition in the gold shoveling, which is one beauty of seeing the dollar heap ahead of others. The people who might have seen it if they had stopped to look were just then looking at baseball games instead, or motoring or buying houses to be paid for with the very dollars that I saw. That was the first time that I had seen big money ahead, and I naturally started toward it on the run. Before I could reach the dollar pile, my wind went back on me, and I fell on the ground. The pile of dollars was still there, but I had lost the shovel, and the wagon was gone. So much for sprinting too soon. I was too eager to prove to myself that I had seen real dollars and not a mirage. I saw and knew that I saw. Thinking about the reward for my excellent sight kept me from considering the distance to the dollar heap. I should have walked and not sprinted. That is what happened. I didn't wait to determine whether or not the time was right for plunging on the bear side. On the one occasion when I should have invoked the aid of my tape reading, I didn't do it. That is how I came to learn that even when one is properly bearish at the very beginning of a bear market, it is well not to begin selling in bulk until there is no danger of the engine backfiring. I had traded in a good many thousands of shares at Harding's office in all those years, and moreover, the firm had confidence in me, and our relations were of the pleasantest. I think they felt that I was bound to be right again very shortly, and they knew that with my habit of pushing my luck, all I needed was a start, and I'd more than recover what I had lost. They had made a great deal of money out of my trading, and they would make more. So there was no trouble about my being able to trade there again, as long as my credit stood high. The succession of spankings I had received made me less aggressively cocksure, perhaps I should say less careless, for of course I knew I was just so much nearer to the smash. All I could do was wait watchfully, as I should have done before plunging. It wasn't a case of locking the stable after the horse was stolen. I simply had to be sure the next time I tried. If a man didn't make mistakes, he'd own the world in a month. But if he didn't profit by his mistakes, he wouldn't own a blessed thing. Well, sir, one fine morning I came downtown feeling cocksure once more. There wasn't any doubt this time. I had read an advertisement in the financial pages of all the newspapers that was the high sign I hadn't had the sense to wait for before plunging. It was the announcement of a new issue of stock by the Northern Pacific and Great Northern Roads. The payments were to be made on the installment plan for the convenience of the stockholders. This consideration was something new in Wall Street. It struck me as more than ominous. For years, the unfailing bull item on Great Northern Preferred had been the announcement that another melon was to be cut. Said melon consisting of the right of the lucky stockholders to subscribe at par to a new issue of Great Northern stock. These rights were valuable, since the market price was always way above par. But now the money market was such that the most powerful banking houses in the country were none too sure the stockholders would be able to pay cash for the bargain. And Great Northern Preferred was selling at about $3.30. As soon as I got to the office, I told Ed Harding, "The time to sell is right now. This is when I should have begun. Just look at that ad, will you?" He had seen it. I pointed out what the banker's confession amounted to, in my opinion, but he couldn't quite see the big break right on top of us. He thought it better to wait before putting out a very big short line by reason of the market's habit of having big rallies. If I waited, prices might be lower, but the operation would be safer. "Ed," I said to him, "the longer the delay in starting, the sharper the break will be when it does start. That ad is a signed confession on the part of the bankers. What they fear is what I hope. This is a sign for us to get aboard the bear wagon. It is all we needed. If I had $10 million, I'd stake every cent of it this minute." I had to do some more talking and arguing. He wasn't content with the only interferences a sane man could draw from that amazing advertisement. It was enough for me, but not for most of the people in the office. I sold a little, too little. A few days later, St. Paul very kindly came out with an announcement of an issue of its own, either stock or notes, I forget which, but that doesn't matter. What mattered then was that I noticed the moment I read it that the date of payment was set ahead of the Great Northern and Northern Pacific payments, which had been announced earlier. It was as plain as though they had used a megaphone. that grand old St. Paul was trying to beat the two other railroads to what little money there was floating around in Wall Street. The St. Paul's bankers quite obviously feared that there wasn't enough for all three, and they were not saying, "After you, my dear Alphanese." If money already was that scarce, and you bet the bankers knew, what would it be later? The railroads needed it desperately. It wasn't there. What was the answer? Sell them, of course. The public, with their eyes fixed on the stock market, saw little that week. The wise stock operators saw much that year. That was the difference. For me, that was the end of doubt and hesitation. I made up my mind for keeps then and there. That same morning, I began what really was my first campaign along the lines that I have since followed. I told Harding what I thought and how I stood, and he made no objections to my selling Great Northern Preferred at around 3:30, and other stocks at high prices. I profited by my earlier and costly mistakes, and sold more intelligently. My reputation and my credit were re-established in a jiffy. That is the beauty of being right in a broker's office, whether by accident or not. But this time I was cold-bloodedly right, not because of a hunch or from skillful reading of the tape, but as the result of my analysis of conditions affecting the stock market in general. I wasn't guessing. I was anticipating the inevitable. It did not call for any courage to sell stocks. I simply could not see anything but lower prices, and I had to act on it, didn't I? What else could I do? The whole list was soft as mush. Presently, there was a rally, and people came to me to warn me that the end of the decline had been reached. The big fellows, knowing the short interest to be enormous, had decided to squeeze the stuffing out of the bears, and so forth. It would set us pessimists back a few millions. It was a cinch that the big fellows would have no mercy. I used to thank these kindly counselors. I wouldn't even argue, because then they would have thought that I wasn't grateful for the warnings. The friend who had been in Atlantic City with me was in agony. He could understand the hunch that was followed by the earthquake. He couldn't disbelieve in such agencies, since I had made $250,000 by intelligently obeying my blind impulse to sell Union Pacific. He even said it was Providence working in its mysterious way to make me sell stocks when he himself was bullish. And he could understand my second UP trade in Saratoga, because he could understand any deal that involved one stock on which the tip definitely fixed the movement in advance, either up or down. But this thing of predicting that all stocks were bound to go down used to exasperate him. What good did that kind of dope do anybody? How in blazes could a gentleman tell what to do? I recalled old Partridge's favorite remark. Well, this is a bull market, you know? As though that were tip enough for anybody who was wise enough, as in truth it was. It was very curious how, after suffering tremendous losses from a break of 15 or 20 points, people who were still hanging on welcomed a 3-point rally and were certain the bottom had been reached and complete recovery begun. One day my friend came to me and asked me, "Have you covered?" "Why should I said. "For the best reason in the world." "What reason is that?" "To make money. They've touched bottom, and what goes down must come up. Isn't that so?" "Yes," I answered. "First they sink to the bottom, then they come up, but not right away. They've got to be good and dead a couple of days. It isn't time for these corpses to rise to the surface. They're not quite dead yet." An old-timer heard me. He was one of those chaps that are always reminded of something. He said that William R. Travers, who was bearish, once met a friend who was bullish. They exchanged market views, and the friend said, "Mr. Travers, how can you be bearish with the market so stiff?" And Travers retorted, "Yes, the stiffness of death." It was Travers who went to the office of a company and asked to be allowed to see the books. The clerk asked him, "Have you an interest in this company?" And Travers answered, "I should say I had. I'm short 20,000 shares of the stock." Well, the rallies grew feebler and feebler. I was pushing my luck for all I was worth. Every time I sold a few thousand shares of Great Northern Preferred, the price broke several points. I felt out weak spots elsewhere, and let them have a few. All yielded, with one impressive exception, and that was reading. When everything else hit the toboggan slide, reading stood like the Rock of Gibraltar. Everybody said the stock was cornered. It certainly acted like it. They used to tell me it was plain suicide to sell reading short. There were people in the office who were now as bearish on everything as I was. But when anybody hinted at selling reading, they shrieked for help. I myself had sold some short and was standing pat on it. At the same time, I naturally preferred to seek and hit the soft spots, instead of attacking the more strongly protected specialties. My tape reading found easier money for me in other stocks. I heard a great deal about the reading bull pool. It was a mighty strong pool. To begin with, they had a lot of low-price stock, so that their average was actually below the prevailing level, according to friends who told me. Moreover, the principal members of the pool had close connections to the friendliest character with the banks, whose money they were using to carry their huge holdings of reading. As long as the price stayed up, the bankers' friendship was staunch and steadfast. One pool member's paper profit was upward of 3 millions. That allowed for some decline without causing fatalities. No wonder the stock stood up and defied the bears. Every now and then, the room traders looked at the price, smacked their lips, and proceeded to test it with 1,000 shares or two. They could not dislodge a share, so they covered and went looking elsewhere for easier money. Whenever I looked at it, I also sold a little more, just enough to convince myself that I was true to my new trading principles and wasn't playing favorites. In the old days, the strength of reading might have fooled me. The tape kept on saying, "Leave it alone." But my reason told me differently. I was anticipating a general break, and there were not going to be any exceptions, pool or no pool. I have always played a lone hand. I began that way in the bucket shops, and have kept it up. It's the way my mind works. I have to do my own seeing and my own thinking. But I can tell you, after the market began to go my way, I felt for the first time in my life that I had allies, the strongest and truest in the world, underlying conditions. They were helping me with all their might. Perhaps they were a trifle slow at times in bringing up the reserves, but they were dependable, provided I did not get too impatient. I was not pitting my tape-reading knack or my hunches against chance. The inexorable logic of events was making money for me. The thing was to be right, to know it, and to act accordingly. General conditions, my true allies, said down, and reading disregarded the command. It was an insult to us. It began to annoy me to see reading holding firmly, as though everything were serene. It ought to be the best short sale in the entire list, because it had not gone down, and the pool was carrying a lot of stock that it would not be able to carry when the money stringency grew more pronounced. Someday, the banker's friends would fare no better than the friendless public. The stock must go with the others. If reading didn't decline, then my theory was wrong. I was wrong. Facts were wrong. Logic was wrong. I figured that the price held because the street was afraid to sell it. So one day I gave to 2 brokers each in order to sell 4,000 shares at the same time. You ought to have seen that cornered stock, that it was sure suicide to go short of, taking a headlong dive when those competitive orders struck it. I let them have a few thousand more. The price was in when I started selling it. Within a few minutes, I took in my entire short line at 92. I had a wonderful time after that, and in February of 1907 I cleaned up. Great Northern Preferred had gone down 60 or 70 points, and other stocks in proportion. I had made a good bit, but the reason I cleaned up was that I figured that the decline had discounted the immediate future. I looked for a fair recovery, but I wasn't bullish enough to play for a turn. I wasn't going to lose my position entirely. The market would not be right for me to trade in for a while. The first $10,000 I made in the bucket shops I lost because I traded in and out of season, every day, whether or not conditions were right. I wasn't making that mistake twice. Also, don't forget that I had gone broke a little while before because I had seen this break too soon and started selling before it was time. Now, when I had a big profit, I wanted to cash in so that I could feel I had been right. The rallies had broken me before. I wasn't going to let the next rally wipe me out. Instead of sitting tight, I went to Florida. I love fishing, and I needed a rest. I could get both down there. And besides, there are direct wires between Wall Street and Palm Beach. Chapter 9. I cruised off the coast of Florida. The fishing was good. I was out of stocks. My mind was easy. I was having a fine time. One day, off Palm Beach, some friends came alongside in a motorboat. One of them brought a newspaper with him. I hadn't looked at one in some days, and had not felt any desire to see one. I was not interested in any news it might print, but I glanced over the one my friend brought to the yacht, and I saw that the market had had a big rally, 10 points and more. I told my friends that I would go ashore with them. Moderate rallies from time to time were reasonable. But the bear market was not over, and here was Wall Street, or the full public, or desperate bull interests, disregarding monetary conditions and marking up prices beyond reason, or letting somebody else do it. It was too much for me. I simply had to take a look at the market. I didn't know what I might or might not do, but I knew that my pressing need was the sight of the quotation board. My brokers, Harding Brothers, had a branch office in Palm Beach. When I walked in, I found there a lot of chaps I knew. Most of them were talking bullish. They were of the type that trade on the tape and want quick action. Such traders don't care to look ahead very far because they don't need to with their style of play. I told you how I got to be known in the New York office as the boy plunger. Of course, people always magnify a fellow's winnings and the size of the line he swings. The fellows in the office had heard that I had made a killing in New York on the bear side, and they now expected that I again would plunge on the short side. They themselves thought the rally would go to a good deal further, but they rather considered it my duty to fight it. I had come down to Florida on a fishing trip. I had been under a pretty severe strain, and I needed my holiday. But the moment I saw how far the recovery in prices had gone, I no longer felt the need of a vacation. I had not thought of just what I was going to do when I came ashore, but now I knew I must sell stocks. I was right, and I must prove it in my old and only way, by saying it with money. To sell the general list would be a proper, prudent, profitable, and even patriotic action. The first thing I saw on the quotation board was that Anaconda was on the point of crossing 300. It had been going up by leaps and bounds, and there was apparently an aggressive bull party in it. It was an old trading theory of mine that when a stock crosses 100 or 200 or 300 for the first time, the price does not stop at the even figure, but goes a good deal higher. So that if you buy it as soon as it crosses the line, it is almost certain to show a profit. Timid people don't like to buy a stock at a new high record, but I had the history of such movements to guide me. Anaconda was only quarter stock. That is, the par of the shares was only $25. It took 400 shares of it to equal the usual 100 shares of other stocks, the par value of which was $100. I figured that when it crossed 300, it ought to keep going, and probably touch 340 in a jiffy. I was bearish, remember, but I was also a tape-reading trader. I knew Anaconda, if it went the way I figured, would move very quickly. Whatever moves fast always appeals to me. I have learned patience and how to sit tight, but my personal preference is for fleet movements, and Anaconda certainly was no sluggard. My buying it because it crossed 300 was prompted by the desire, always strong in me, of confirming my observations. Just then, the tape was saying that the buying was stronger than the selling, and therefore the general rally might easily go a bit further. It would be prudent to wait before going short. Still, I might as well pay myself wages for waiting. This would be accomplished by taking a quick 30 points out of Anaconda. Bearish on the entire market and bullish on that one stock. So I bought 32,000 shares of Anaconda. That is, 8,000 full shares. It was a nice little flyer, but I was sure of my premises, and I figured that the profit would help to swell the margin available for bear operations later on. On the next day, the telegraph wires were down on account of a storm up north, or something of the sort. I was in Harding's office waiting for news. The crowd was chewing the rag and wondering all sorts of things, as stock traders will when they can't trade. Then we got a quotation, the only one that day. Anaconda, 292. There was a chap with me, a broker I had met in New York. He knew I was long 8,000 full shares, and I suspect that he had some of his own. For when we got that one quotation, he certainly had a fit. He couldn't tell whether the stock at that very moment had gone off another 10 points or not. The way Anaconda had gone up, it wouldn't have been anything unusual for it to break 20 points. But I said to him, "Don't you worry, John. It'll be all right tomorrow." That was really the way I felt, but he looked at me and shook his head. He knew better. He was that kind. So I laughed, and I waited in the office in case some quotation trickled through. But no, sir. That one was all we got. Anaconda, 292. It meant a paper loss to me of nearly $100,000. I had wanted quick action. Well, I was getting it. The next day, the wires were working, and we got the quotations as usual. Anaconda opened at 298 and went up to 302, but pretty soon it began to fade away. Also, the rest of the market was not acting just right for a further rally. I made up my mind that if Anaconda went back to 301, I must consider the whole thing a fake movement. On a legitimate advance, the price should have gone to 310 without stopping, If instead it reacted, it meant that precedents had failed me, and I was wrong. And the only thing to do when a man is wrong is to be right by ceasing to be wrong. I had bought 8,000 full shares in expectation of a 30 or 40-point rise. It would not be my first mistake, nor my last. Sure enough, Anaconda fell back to 301. The moment it touched that figure, I sneaked over to the telegraph operator. They had a direct wire to the New York office, and I said to him, "Sell all my Anaconda, 8,000 full shares." I said it in a low voice. I didn't want anybody else to know what I was doing. He looked up at me almost in horror, but I nodded and said, "All I've got." "Surely, Mr. Livingston, you don't mean at the market." And he looked as if he was going to lose a couple of millions of his own through bum execution by a careless broker. But I just told him, "Sell it. Don't argue about it." The two black boys, Jim and Ollie, were in the office, out of hearing of the operator and myself. They were big traders who had come originally from Chicago, where they had been famous plungers in wheat, and were now heavy traders on the New York Stock Exchange. They were very wealthy, and were high rollers for fare. As I left the telegraph operator to go back to my seat in front of the quotation board, Oliver Black nodded to me and smiled. "You'll be sorry, Larry," he said. I stopped and asked him, "What do you mean?" "Tomorrow, you'll be buying it back." "Buying what back?" I said. I hadn't told a soul except the telegraph operator. "Anaconda," he said. "You'll be paying $3.20 for it. That wasn't a good move of yours, Larry." And he smiled again. "What wasn't?" And I looked innocent. "Selling your 8,000 Anaconda at the market. In fact, insisting on it," said Ollie Black. I knew that he was supposed to be very clever and always traded on inside news. But how he knew my business so accurately was beyond me. I was sure the office hadn't given me away. "Ollie, how did you know that?" I asked him. He laughed and told me, "I got it from Charlie Kratzer. That was the telegraph operator." "But he never budged from his place," I said. "I couldn't hear you and him whispering," he chuckled. "But I heard every word of the message he sent to the New York office for you. I learned telegraphy years ago, after I had a big row over a mistake in a message. Since then, when I do what you just did now, give an order by word of mouth to an operator, I want to be sure the operator sends the message as I give it to him. I know what he sends in my name, but you'll be sorry you sold that Anaconda. It's going to 500. "Not this trip, Ollie," I said. He stared at me and said, "You're pretty cocky about it." "Not I. The tape," I said. There wasn't any ticker there, so there wasn't any tape, but he knew what I meant. "I've heard of those birds," he said, who look at the tape and instead of seeing prices, they see a railroad timetable of the arrival and departure of stocks. But they were in padded cells, where they couldn't hurt themselves. I didn't answer him anything, because about that time the boy brought me a memorandum. They had sold 5,000 shares at $2.99 3/4. I knew our quotations were a little behind the market. The price on the board at Palm Beach when I gave the operator the order to sell was $3.01. I felt so certain that at that very moment the price at which the stock was actually selling on the stock exchange in New York was less, that if anybody had offered to take the stock off my hands at $2.96, I'd have been tickled to death to accept. What happened shows you that I am right in never trading at limits. Suppose I had limited my selling price to $300. I'd never have got it off. No, sir. When you want to get out, get out. Now, my stock cost me about $300. They got off 500 shares, full shares, of course, at $2.99 3/4. The next 1,000 were sold at $2.99 5/8. Then 100 at a half, 200 at 3/8, and 200 at a quarter. The last of my stock went at $2.98 3/4. It took Harding's cleverest floor man 15 minutes to get rid of that last 100 shares. They didn't want to crack it wide open. The moment I got the report of the sale of the last of my long stock, I started to do what I had really come ashore to do, that is, to sell stocks. I simply had to. There was the market after its outrageous rally, begging to be sold. Why, people were beginning to talk bullish again. The course of the market, however, told me that the rally had run its course. It was safe to sell them. It did not require reflection. The next day, Anaconda opened below $2.96. Oliver Black, who was waiting for a further rally, had come down early to be a Johnny on the spot when the stock crossed $3.20. I don't know how much of it he was long of, or whether he was long of it at all, but he didn't laugh when he saw the opening prices, nor later in the day when the stock broke still more, and the report came back to us in Palm Beach that there was no market for it at all. Of course, that was all the confirmation any man needed. My growing paper profit kept reminding me that I was right hour by hour. Naturally, I sold some more stocks. Everything. It was a bear market. They were all going down. The next day was Friday, Washington's birthday. I couldn't stay in Florida and fish because I had put out a very fair short line for me. I was needed in New York. Who needed me? I did. Palm Beach was too far, too remote. Too much valuable time was lost telegraphing back and forth. I left Palm Beach for New York. On Monday, I had to lie in St. Augustine 3 hours waiting for a train. There was a broker's office there, and naturally, I had to see how the market was acting while I was waiting. Anaconda had broken several points since the last trading day. As a matter of fact, it didn't stop going down until the big break that fall. I got to New York and traded on the bear side for about 4 months. The market had frequent rallies as before, and I kept covering and putting them out again. I didn't, strictly speaking, sit tight. Remember, I had lost every cent of the $300,000 I made out of the San Francisco earthquake break. I had been right and, nevertheless, had gone broke. I was now playing safe because after being down, a man enjoys being up, even if he doesn't quite make the top. The way to make money is to make it. The way to make big money is to be right at exactly the right time. In this business, a man has to think of both theory and practice. A speculator must not be merely a student. He must be both a student and a speculator. I did pretty well, even if I can now see where my campaign was tactically inadequate. When summer came, the market got dull. It was a cinch that there would be nothing doing in a big way until well along in the fall. Everybody I knew had gone, or was going to Europe. I thought that would be a good move for me, so I cleaned up. When I sailed for Europe, I was a trifle more than $750,000 to the good. To me, that looked like some balance. I was in Aix-les-Bains enjoying myself. I had earned my vacation. It was good to be in a place like that with plenty of money and friends and acquaintances and everybody intent upon having a good time. Not much trouble about having that in X. Wall Street was so far away that I never thought about it. And that is more than I could say of any resort in the United States. I didn't have to listen to talk about the stock market. I didn't need to trade. I had enough to last me quite a long time. And besides, when I got back, I knew what to do to make much more than I could spend in Europe that summer. One day I saw in the Paris Herald a dispatch from New York that smelters had declared an extra dividend. They had run up the price of the stock and the entire market had come back quite strong. Of course, that changed everything for me and X. The news simply meant that the bull cliques were still fighting desperately against conditions, against common sense, and against common honesty. For they knew what was coming, and were resorting to such schemes to put up the market in order to unload stocks before the storm struck them. It is possible they really did not believe the danger was as serious, or as close at hand as I thought. The big men of the street are as prone to be wishful thinkers as the politicians or the plain suckers. I myself can't work that way. In a speculator, such an attitude is fatal. Perhaps a manufacturer of securities or a promoter of new enterprises can afford to indulge in hopejacks. At all events, I knew that all bull manipulation was foredoomed to failure in that bear market. The instant I read the dispatch, I knew there was only one thing to do to be comfortable, and that was to sell smelters short. Why, the insiders as much as begged me on their knees to do it when they increased the dividend rate on the verge of a money panic. It was as infuriating as the old dares of your boyhood. They dared me to sell that particular stock short. I cabled some selling orders in smelters and advised my friends in New York to go short of it. When I got my report from the brokers, I saw the price they got was 6 points below the quotations I had seen in the Paris Herald. It shows you what the situation was. My plans had been to return to Paris at the end of the month, and about 3 weeks later sail for New York. But as soon as I received the cabled reports from my brokers, I went back to Paris. The same day I arrived, I called at the steamship offices and found there was a fast boat leaving for New York the next day. I took it. There I was, back in New York, almost a month ahead of my original plans, because it was the most comfortable place to be short of the market in. I had well over $500,000 in cash available for margins. My return was not due to my being bearish, but to my being logical. I sold more stocks. As money got tighter, call money rates went higher and prices of stocks lower. I had foreseen it. At first, my foresight broke me, but now I was right and prospering. However, the real joy was in the consciousness that as a trader, I was at last on the right track. I still had much to learn, but I knew what to do. No more floundering, no more half-right methods. Tape reading was an important part of the game. So was beginning at the right time. So was sticking to your position. But my greatest discovery was that a man must study general conditions to size them so as to be able to anticipate probabilities. In short, I had learned that I had to work for my money. I was no longer betting blindly or concerned with mastering the techniques of the game, but with earning my successes by hard study and clear thinking. I also had found out that nobody was immune from the danger of making sucker plays. And for a sucker play, a man gets sucker pay. For the paymaster is on the job and never loses the pay envelope that is coming to you. Our office made a great deal of money. My own operations were so successful that they began to be talked about, and of course, were greatly exaggerated. I was credited with starting the breaks in various stocks. People I didn't know by name used to come and congratulate me. They all thought the most wonderful thing was the money I had made. They did not say a word about the time when I first talked bearish to them, and they thought I was a crazy bear with a stock market loser's vindictive grouch. That I had foreseen the money troubles was nothing. That my broker's bookkeeper had used a third of a drop of ink on the credit side of the ledger under my name was a marvelous achievement to them. Friends used to tell me that in various offices, the boy plunger in Harding Brothers' office was quoted as making all sorts of threats against the bull cliques that had tried to mark up prices of various stocks long after it was plain that the market was bound to seek a much lower level. To this day, they talk of my raids. From the latter part of September on, the money market was megaphoning warnings to the entire world. But a belief in miracles kept people from selling what remained of their speculative holdings. Why, a broker told me a story the first week of October that made me feel almost ashamed of my moderation. You remember that money loans used to be made on the floor of the exchange around the money post. Those brokers who had received notice from their banks to pay call loans knew in a general way how much money they would have to borrow afresh. And of course, the banks knew their position so far as loanable funds were concerned, and those which had money to loan would send it to the exchange. This bank money was handled by a few brokers whose principal business was time loans. At about noon, the renewal rate for the day was posted. Usually, this represented a fair average of the loans made up to that time. Business was, as a rule, transacted openly by bids and offers, so that everyone knew what was going on. Between noon and about 2 o'clock, there was ordinarily not much business done in money, but after delivery time, namely 2:15 p.m., brokers would know exactly what their cash position for the day would be, and they were able either to go to the money post and lend the balances that they had over, or to borrow what they required. This business was also done openly. Well, sometime early in October, the broker I was telling you about came to me and told me that brokers were getting so they didn't go to the money post when they had money to loan. The reason was that members of a couple of well-known commission houses were on watch there, ready to snap up any offerings of money. Of course, no lender who offered money publicly could refuse to lend to these firms. They were solvent, and the collateral was good enough. But the trouble was that once these firms borrowed money on call, there was no prospect of the lender getting that money back. They simply said they couldn't pay it back, and the lender would willy-nilly have to renew the loan. So any stock exchange house that had money to loan to its fellows used to send its men about the floor instead of to the post, and they would whisper to good friends. Want 100? Meaning, do you wish to borrow $100,000? The money brokers who acted for the banks presently adopted the same plan, and it was a dismal sight to watch the money post. Think of it. Why, he also told me that it was a matter of stock exchange etiquette in those October days for the borrower to make his own rate of interest. You see, it fluctuated between 100 and 150% per annum. I suppose by letting the borrower fix the rate, the lender in some strange way didn't feel so much like a usurer. But you bet he got as much as the rest. The lender naturally did not dream of not paying a high rate. He played fair and paid whatever the others did. What he needed was the money, and was glad to get it. Things got worse and worse. Finally, there came the awful day of reckoning for the bulls and the optimists and the wishful thinkers, and those vast hordes that, dreading the pain of a small loss at the beginning, were now about to suffer total amputation without anesthetics. A day I shall never forget, October 24th, 1907. Reports from the money crowd early indicated that borrowers would have to pay whatever the lenders saw fit to ask. There wouldn't be enough to go around. That day, the money crowd was much larger than usual. When delivery time came that afternoon, there must have been 100 brokers around the money post. each hoping to borrow the money that his firm urgently needed. Without money, they must sell what stocks they were carrying on margin, sell at any price they could get in a market where buyers were as scarce as money. And just then, there was not a dollar in sight. My friend's partner was as bearish as I was. The firm, therefore, did not have to borrow, but my friend, the broker I told you about, fresh from seeing the haggard faces around the money post, came to me. He knew I was heavily short of the entire market. He said, "My God, Larry, I don't know what's going to happen. I never saw anything like it. It can't go on. Something has got to give. It looks to me as if everybody is busted right now. You can't sell stocks, and there's absolutely no money in there." "How do you mean?" I asked. But what he answered was, "Did you ever hear of the classroom experiment of the mouse on a glass bell? When they begin to pump the air out of the bell, you can see the poor mouse breathe faster and faster, its sides heaving like overworked bellows, trying to get enough oxygen out of the decreasing supply in the bell. You watch it suffocate till its eyes almost pop out of their sockets, gasping, dying. Well, that is what I think of when I see the crowd at the money post. No money anywhere, and you can't liquidate stocks because there's nobody to buy them. The whole street is broke at this very moment, if you ask me." It made me think. I had seen a smash coming, but not, I admit, the worst panic in our history. It might not be profitable to anybody if it went much further. Finally, it became plain that there was no use in waiting at the post for money. There wasn't going to be any. Then hell broke loose. The president of the stock exchange, Mr. R.H. Thomas, so I heard later in the day, knowing that every house on the street was headed for disaster, went out in search of succor. He called on James Stillman, president of the National City Bank, the richest bank in the United States. Its boast was that it never loaned money at a higher rate than 6%. Stillman heard what the president of the New York Stock Exchange had to say. Then he said, "Mr. Thomas, we'll have to go and see Mr. Morgan about this." The two men, hoping to stave off the most disastrous panic in our financial history, went together to the office of J.P. Morgan and Company and saw Mr. Morgan. Mr. Thomas laid the case before him. The moment he got through speaking, Mr. Morgan said, "Go back to the exchange and tell them that there will be money for them." "Where?" "At the banks." So strong was the faith of all men in Mr. Morgan in those critical times that Thomas didn't wait for further details, but rushed back to the floor of the exchange to announce the reprieve to his death-sentenced fellow members. Then, before 2:30 in the afternoon, J.P. Morgan sent John T. Atterbury, of Van Imberg and Atterbury, who was known to have close relations with J.P. Morgan and Company, into the crowd. My friend said that the old broker walked quickly to the money post. He raised his hand like an exhorter at a revival meeting. The crowd, that at first had been calmed down somewhat by President Thomas's announcement, was beginning to fear that the relief plans had miscarried, and the worst was still to come. But when they looked at Mr. Atterbury's face and saw him raise his hand, they promptly petrified themselves. In the dead silence that followed, Mr. Atterbury said, "I am authorized to lend $10 million. Take it easy. There will be enough for everybody." Then he began. Instead of giving to each borrower the name of the lender, he simply jotted down the name of the borrower and the amount of the loan and told the borrower, "You will be told where your money is." He meant the name of the bank from which the borrower would get the money later. I heard a day or two later that Mr. Morgan simply sent word to the frightened bankers of New York that they must provide the money the stock exchange needed. "But we haven't got any. We're loaned up to the hilt," the banks protested. "You've got your reserves," snapped J.P. "But we're already below the legal limit," they howled. "Use them. That's what reserves are for." And the banks obeyed and invaded the reserves to the extent of about $20 million. It saved the stock market. The bank panic didn't come until the following week. He was a man. J.P. Morgan was. They don't come much bigger. That was the day I remember most vividly of all the days of my life as a stock operator. It was the day when my winnings exceeded $1 million. It marked the successful ending of my first deliberately planned trading campaign. What I had foreseen had come to pass, but more than all these things was this. A wild dream of mine had been realized. I had been king for a day. I'll explain, of course. After I had been in New York a couple of years, I used to cudgel my brains trying to determine the exact reason why I couldn't beat in a stock market exchange house in New York, the game that I had beaten as a kid of 15 in a bucket shop in Boston. I knew that someday I would find out what was wrong, and I would stop being wrong. I would then have not alone the will to be right, but the knowledge to ensure my being right. And that would mean power. Please do not misunderstand me. It was not a deliberate dream of grandeur, or a futile desire born of overweening vanity. It was rather a sort of feeling that the same old stock market that so baffled me in Fullerton's office and in Harding's would one day eat out of my hand. It just felt that such a day would come. And it did, October 24th, 1907. The reason why I say it is this. That morning, a broker who had done a lot of business for my brokers and knew that I had been plunging on the bear side rode down in the company of one of the partners of the foremost banking house in the street. My friend told the banker how heavily I had been trading, for I certainly pushed my luck to the limit. What is the use of being right unless you get all the good possible out of it? Perhaps the broker exaggerated to make his story sound important. Perhaps I had more of a following than I knew. Perhaps the banker knew far better than I how critical the situation was. At all events, my friend said to me, he listened with great interest to what I told him you said the market was going to do when the real selling began, after another push or two. When I got through, he said he might have something for me to do later in the day. When the commission houses found out there was not a cent to be had at any price, I knew the time had come. I sent brokers into various crowds. Why, at one time there wasn't a single bid for Union Pacific, not at any price. Think of it. And in other stocks, the same thing. No money to hold stocks, and nobody to buy them. I had enormous paper profits, and the certainty that all that I had to do to smash prices still more was to send in orders to sell 10,000 shares each of Union Pacific, and of a half dozen other good dividend-paying stocks, and what would follow would be simply hell. It seemed to me that the panic that would be precipitated would be of such an intensity and character that the Board of Governors would deem it advisable to close the exchange, as was done in August 1914 when the World War broke out. It would mean greatly increased profits on paper. It might also mean an inability to convert those profits into actual cash. But there were other things to consider, and one was that a further break would retard the recovery that I was beginning to figure on. The compensating improvement after all that bloodletting. Such a panic would do much harm to the country generally. I made up my mind that since it was unwise and unpleasant to continue actively bearish, it was illogical for me to stay short. So I turned and began to buy. It wasn't long after my brokers began to buy in for me, and, by the way, I got bottom prices that the banker sent for my friend. I have sent for you, he said, because I want you to go instantly to your friend Livingston and say to him that we hope he will not sell any more stocks today. The market can't stand much more pressure. As it is, it will be an immensely difficult task to avert a devastating panic. Appeal to your friend's patriotism. This is a case where a man has to work for the benefit of all. Let me know at once what he says. My friend came right over and told me. He was very tactful. I suppose he thought that having planned to smash the market, I would consider his request as equivalent to throwing away the chance to make about $10 million. He knew I was sore on some of the big guns for the way they had acted, trying to land the public with a lot of stock when they knew as well as I did what was coming. As a matter of fact, the big men were big sufferers, and lots of the stocks I bought at the very bottom were in famous financial names. I didn't know it at the time, but it did not matter. I had practically covered all my shorts, and it seemed to me there was a chance to buy stocks cheap and help the need of recovery in prices at the same time, if nobody hammered the market. So I told my friend, go back and tell Mr. Blank that I agree with them, and that I fully realized the gravity of the situation even before he sent for you. I will not only not sell any more stocks today, but I'm going to go in and buy as much as I can carry. And I kept my word. I bought 100,000 shares that day for the long account. I did not sell another stock short for 9 months. That is why I said to my friends that my dream had come true, and that I had been king for a moment. The stock market at one time that day certainly was at the mercy of anybody who wanted to hammer it. I do not suffer from delusions of grandeur. In fact, you know how I feel about being accused of raiding the market, and about the way my operations are exaggerated by the gossip of the street. I came out of it in fine shape. The newspaper said that Larry Livingston, the boy plunger, had made several millions. Well, I was worth over $1 million after the close of business that day, but my biggest winnings were not in dollars, but in the intangibles. I had been right. I had looked ahead and followed a clear-cut plan. I had learned what a man must do in order to make big money. I was permanently out of the gambler class. I had at last learned to trade intelligently in a big way. It was a day of days for me.